Hi guys, today we are going to be talking about how to use Orderflow to identify an order block, or using a footprint chart to identify an order block, which will help you in your trading. All right, so but we have to know what an order block is. I know you guys are already trading order blocks. This is just a tool that will just help you to get your good entry. Now, an order block is an area where we have pile up of orders by large entities. We might have one area, there's a lot of orders there, and it is also used by banks to split big orders into smaller quantity or smaller chunks. All right. Wherever we have accumulation of orders, that's when we are bullish. And whenever we have distributions of orders, that is when we are bearish. So we have to keep all this in mind. All right. Now I'm going to be walking you through some good examples. All right. Very, very good one. So you can also check your charts and confirm along with me. Let's start with GBPUSD. All right, let's start with GBPUSD. All right, so this is GBPUSD. And looking at what we have here, we have this is on the 7th, all right, around 6 a.m., 7 a.m., all right. Looking at around this time, we have another block here, all right. You can see another block, and I already marked it out, all right. I can also draw it down here, but I don't want to include anyone. I just want it to be drawn on a smaller time frame. So if you check the smaller time frame, this will be the other block, all right. So, but if you take it to a bigger time frame like this 1 hour, it's gonna give you more. So, but let's talk about this, all right. So we want to identify if there are sellers coming in here using the footprint charts. All right, that's what we want to do. So when the price, was actually coming here, you could see that there are a lot of buyers coming in, and around 6 o'clock, 6 to 7, that is when the price started selling. So let's check our footprint charts if we can actually identify the sellers coming in. All right. Now, looking at this here, you will notice that around 6, 7, so that is between 6, 7, that what I was showing you was 1 hour time frame. So between 6, 7, there are a lot of buyers coming in here. That means you don't want to enter the market, even if you are seeing smaller retracements. This is based on 10 minutes. You can use any time frame you like, but I'm convenient with 10 minutes. Now, you can see that there are a lot of buyers coming in here. If you look at the delta percentage, a lot of buyers are coming in here, and they are not decreasing. You understand? Even if they are decreasing, is not extensive reduction. All right, it's something small. All right, from 33 to 28 to 25. So this means that sellers are not actually coming in. So I don't want to do anything selling here. All right. Even after drawing my order block, I'm just waiting for sellers to come in so that I can also go in the market. But if you look at this candle here, all right, let me put a crossbar across there. Now, if you look at this candle here, you can see this bullish candle here. All right. This bullish candle is where the sellers started coming in. That is where the big orders started coming in. You can see that it moves from 25% to minus 36%. So this is a lot of gap. All right. A lot. All right. So if you are going to see the difference between this and this, it is around 60, 61, or probably, around that range, 61, because you are going to go from 25 to 0 first, then from 0 to minus 36. So that is around 61. All right, that's the difference. So the difference is very large. This shows that this is not just you and I entering the market here. This is a big order entering the market. And as you can see, what follows it, boom, landslide, the price is just going towards the south side. So, and it's a very good sell if you just make your entry around here, little drawdown and boom, nice reward. All right. So let's go back to the charts. So looking at the charts, you are going to notice that the sellers came in around here, and after them coming in, that is when the price started going all the way down. So this is one way you can use to identify a very good order block, all right? Because you can see the percentage difference, all right? So you are not going to enter, even if the price enter your order block, doesn't mean that sellers have started coming in. So you should not enter, all right? You have to enter when you actually confirm that they are real sellers. You know, the big guys are actually entering the market. If you have other software like, you know, Bookmap and the rest, you are going to be seeing those orders, all right? Even you're going to see the iceberg orders, you're going to see a lot of, you know, limit order, LOB and the rest. So you're going to be seeing it. So that one is even clearer. But with this will also help you a lot in, you know, entering your market. Now, let's move to another example. Let's go to Euro USD. All right. Let's check this. So if you notice this, can you see this order block here? All right. This is nice. So do you see this order block here? You can see that when the price retraces and enter the order block, taking out the small liquidity around here, the price sold nicely. Now let's check our order flow if we can confirm that. So this happened around, let's check the time, 12, that will be 12 p.m. So let's go to USD. All right. So here it is. Now, if you look at this, you're going to notice that, you know, a lot of buyers were coming in here. All right. That means you should not enter the market yet. You should not enter the market yet. And then boom, we now have this drop. Now, take a look at the percentage here. We have 29 and we have 19. There is a reduction, but not that much. All right. This is just like 10. But from 19 to 1, all right, this is a big one. All right, this is a big one. But you might not yet be convinced that, okay, I don't want to enter since it's not negative and blah, blah. But you can also risk it like, okay, from 19 to 1, I think some guys are entering, but, you know, we still have some buyers, you know, pushing the market up. So you might say, yes, I want to enter. Yes, you know, I don't want to enter. That's your choice. But if you look at this, all right, if you look at this, we now have -6. All right, we now have -6. So this is a confirmed entry here because we're having -6 here. All right, this is a confirmed entry here. So you might have entered here and you can also enter here. You know, both, there is no much difference between the two entries. All right, and you can see little or no drawdown. You're having little or no drawdown. So this is a good one, and you can see how the price sold nicely. All right, after entering the other block, how the price sold nicely after entering the other block. So this is also a very great one. All right. So let's go to another one. All right, this is also a very good example here. All right, this happened about 2 days ago. I was actually on this trade. So you can see the buyers coming in here. This other block, all right. This happened. Today is Friday. This was Wednesday. So the price retraces back into this other block, and boom, the price started buying from there, made a retracement, you know, for lower time frame entries, and boom, the price bought so nicely. All right. So how do you know this other block is going to be good and you can enter it and, you know, everything will be fine? So let's just go. This happened around, let's check the date and the time. So this was on the 8th, around 1500. All right, 14, 1500 on the 8th. So let's check our order flow. All right, GBP, USD. All right, on the 8th. All right, this is 8. All right, here it is. So this is a very good one because I was on this trade. Now I saw this seller, coming in, and I was watching it. All right, I was watching it. They were coming in, they were rushing in, and I was like, okay, let's see what's going to happen. And the price now entered the order block. All right. After the price entering the order block, we could see that there are still, some remnants of sellers coming in here. All right, we can see minus 5%, minus 12%, minus 5%, minus 5%. Then this last candle here, we could see some buyers coming in very, very hard here. All right, you could see them here. Some buyers coming in very hard here. And it's from minus 5 to 0. All right, to 0. You can say, yeah, this is my entry and I want to enter now. Fine, it's good if you enter now, because you could see the difference from minus 5 to 0, and that 0 is in positive. So that means, we can actually make an entry here. But what if you don't want to make an entry? If you want to get more confirmation that, there are buyers coming in? Look at this candle here. So it's moved from 0 to 21% here. So this means that no doubt you are not doubting the market again. Now there is a lot of accumulation, there's a lot of buyers coming in, and boom, the price just went, to the north. All right, this is a very great example. You can actually enter here. There's also a retracement for you to, make a re-entry. But, there is a good one. If you make your entry here, your stop loss is not that much, and boom, you are having a great reward. So you're having a great reward. And as you can see, if you measure it here, even if you put your stop loss there, that's around 20 pips, and the TP is around 100 pips. So that's 1 to 5, very easy. But if you use the stop loss on the order flow, you're going to get even more than that. So that's a very good one, a brilliant trade. I was on it, and it actually moved well. And the one that happened yesterday, all right, that was Thursday, is on USDCAD, and I'm still on the trade. All right, I'm still on the trade. All right, so looking at it, I'm gonna go out of the trade after this video. Now looking at it, I made an entry here. Look at my entry, and the price, goes all the way to the top from here up here. All right, up here. This is more than 80 pips if I close it at the top here after taking out this liquidity. You understand? So this is a very nice entry, and it's a very, very nice trade. And we can actually draw the other block like this. All right, you can draw the other block like this, and watch onto this, not the low, the close of the candle here. Now we can actually draw it and see if the buyers are coming in here. So since this is USDCAD, we are going to be checking CAD USD. So we are going to be looking for sellers there. And once sellers comes there, it means buyers are actually coming here because it is actually inverted. All right. So let's check it. What time was this? This was around 13:14. 13:14. All right. That was yesterday. So let's check that. 13:14. So 6C. All right. Here. So we are looking for sellers here. So that means we are looking for buyers there. So because they are actually inverted, but it's the same thing. So now here, what do we have? We have the buyers actually coming in. Since we are looking for sellers, so we are not going to do anything. All right. We are not going to do anything. So you can see the buyers here. From here, we have 14. It looks like they want to come, but boom, it's price, got up again because the price have not yet reached the other block. Then we have 13, buyers coming in. We have 1. All right, this is telling us that no, there is a very big difference here. But the candle is still bullish. But it doesn't mean, you might say, yeah, I want to enter. Yes, I don't want to enter, but it's fine. Now, take a look at this. From 1 to minus 11. All right. So this is a very great change here. And you can see here that this is not just you and I. This is a very big order here. Look at this place here that is being painted red. This is, whenever you see this, it means it's a very big order. There are some of the guys that scalp, and when they scalp, they use this kind of method to actually scalp, probably 5 pips, 3 pips, 4 pips, and it's actually work. But you know, I don't scalp so low like that. Even if I want to scalp, I'll scalp like 15-20 pips. So now look at this. This is a very big order. If you don't want to enter here, where else are you going to enter? No place is better than this. All right, and it is at the top. You are starting with them. So this is one of the best, you know, entry you can ever get as a trader. All right, as a trader. So look at it, minus 11%, and boom, you can also see this is also another confirmation. You see a lot of sellers coming in here, and boom, the price started selling nicely. Look at how it sold. It sold nicely. You understand? It sold nicely. So even if you make your entry here and you put your stop loss probably 10 pips, you know, you're having a great reward of 70 pips, 70, 80 pips. So that is a nice one. And as you can see, the price actually went well. So as you can see, the price actually, you know, played well, actually going to the north here. So because since it's selling there, we are buying here. So the price, I made my entry around here. All right. Then the price actually moved up. A lot of people ask me, where is my stop loss? The stop loss is around here, around the rejection area here. That's where I put my stop loss. All right, just removed it before the video. So that's a nice trade. So I hope you guys have learned a lot from this, and this is a very good tool that will help you in terms of your trading, whatever style of trading you are using. So thanks guys for watching the video. Have a nice day. Bye.